stream is how to achieve a high win-loss ratio. It's so important because without a high win-loss ratio, you are not going to be a profitable trader. Very straightforward. Meaning you will win some, you will lose some, but all in all, your winnings need to be greater than your losses, obviously, in order to be profitable. Now, if you haven't already done so, do take a moment to subscribe to this channel so you can get similar content that can help you on your trading journey. I would also appreciate a like. 3 points. The very first one is only trade the breakout or the breakdown strategy. Okay, so I'm going to go over it briefly. I mean, yes, you could call it a strategy, but it's so basic that once you understand what it is, you will always be looking out for the breakout. I mean, at the end of the day, a stock can move in the direction you want, and it doesn't mean you'll necessarily make money, because in price action, there's always those pullbacks. Understanding the strategy will help to ensure that we're entering into those trades at the point at which it will end up being a profitable trade. So here's the breakout. This is the breakout at this blue line right here. I have it written in here, breakout. Why is it the breakout? It's a breakout because if you look to the left of the breakout sign, you can see that these two candlesticks stopped at this point, resistance. So the blue price line is a resistance to price action at this point. It cannot break through the ceiling. Resistance is the ceiling. So that tells you at this price line, there are sellers. Sellers push the price down. Buyers push price up. So once price is heading up, 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 and it gets to this price line, there are sell orders going in. Sell, sell, sell. And the sell orders outnumber the buy orders. And so we have this dip in price, right? So you're waiting for price action to come back to test the resistance. These two candlesticks can't break through, but this is the big guy that breaks through. This guy here breaks through resistance. Can you see that? This candlestick breaks through resistance. Now that's a good sign. That's what you're looking out for. That's the breakout. Only problem is it going to stay above the resistance? So as soon as your candlestick, usually I will trade on the 1 minute candlestick. If I'm day trading, I'm going to enter into my trade on the 1 minute. I'm not going to compromise. I enter in on the 1 minute. If I'm trying to play super safe, I may enter in on the 5 minute. So anywhere between the 1, the 2, the 3, the 4, whatever, the 5 minutes is when you want to enter into your trade. You don't want to enter a trade on a 1 hour. What's that? If you're investing, sure. You're investing for the long haul, over the long haul, sure, but not if you're day trading. This candlestick here, guys, is the operational one. It closes above. The first candlestick, the first green one, closes above or breaks out above the blue level and closes. It's got to break out and close. Okay, a close is when a candlestick is completed. Okay, within the 1 minute, I'm on a 5 minute chart right now. So within this 5 minute, this candlestick turned red. You can see from this wick at the bottom. It opened up right here. It went down. It was red. And within the 5 minute period, it went up, probably came down, red, green, red, green, red, green. But at the end of the time period, it closed. That's when you want to enter into your trade. This big guy here closed. It closed. So after the close, look what happened. Dip, 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 dip. So yes, two things could have happened here. You could have entered in after it closed. It ran up and came down. But look at where your stop loss is. Your stop loss is always going to be below your entry point. Okay. So even though you entered in on this candlestick here, this second green candlestick, price action came back against you, but it didn't come all the way back down to your stop loss. And look what happened. We have this candlestick, and I'm gonna draw another breakout point. So it breaks out again, resistance. Here again, I'm going to circle the resistance point. Now you see this resistance? It's resistance again because we have these three candlesticks could not break above the green line. One candlestick, two candlestick, three candlesticks. It couldn't break above. And so we wait again. Here's the guy, this green one. It breaks above and we want to enter into our trade when it closes. Now, you enter into your trade and it runs up. Beautiful uptrend. Anywhere on this escalator up, begin to take profit. Now, when I say anywhere, I use it very loosely because generally speaking, you're taking profit at your different support and resistance levels. So that's like key. But again, that's for a different topic. So basically, we're taking profit. But I'm going to move forward in time. We are going to assume that you enter into the scene when price action is already, I don't know, it's up 5%, it's up 3%, it's already running up, and you're thinking, oh my goodness, it's running up, how did I miss it? This is the point at which you want to be very, very cautious. You want to be patient enough for this baby here to get as high as it needs to get and to retrace. You want to pull back. Okay, so you're waiting. We're waiting. It goes. Ratios. To improve your win-loss ratios, you only want to be entering in at support and resistance or key price levels. You can identify key price levels by learning how to draw these support and resistance lines. So you've missed out on breakout number one. So we're going to wait. We're always going to wait. You want to wait until it comes back to blue line. It's coming back. Price action will pull back to the blue line. And you can see what happened. It took some time, but price action, didn't it come back? Okay, so that means it's come back to retest the previous really strong level. That previous level before was resistance. Now it is support because it's supporting the price. It's like, so support is your floor, resistance is your ceiling. And that's why I've drawn these two blue lines. We have the support and we have a resistance. We have the floor and we have the ceiling. And so we're waiting to buy or sell at the floor or the ceiling to increase our wins and losses. It doesn't mean if you buy or sell at other points within these two blue lines, it doesn't mean you won't make money. It just means you will not, you reduce your chances of coming away with a profitable trade. That's all it is. It doesn't mean you can't win. You can just get lucky. Price action is, kind of strong. Momentum is strong. And all that good stuff. And yes, you can make money, but you'll be making money not because of your strategy, but because the market was favorable. We come back here and look what happens. Red dumping all the way down to our stop loss point. And we want to enter, right? Because we've been patiently waiting for price action to come down. We have this first green candle, which is awesome. It closes green. And most importantly, it closes above resistance. Good. It's the second green candle we're looking for. We're waiting for confirmation. And we see we close on this second green candle. Good. Really nice. That second one. We have a little retracement. And we're going to buy at the next breakout point. I'm going to move the green line. Hang on. And this is there, breakout point number 2. Okay, so we're going to enter into our trade. Now, Once you enter into 2 points, you can enter in at the first green candle here. You can wait, you can enter in at this second, but the point is not to get excited. Don't get excited and hit the sell button just because you see 1 or 2 red candles. Your job as a trader is to be calm enough to determine, is it a mere pullback or is it a reversal? Well, it's never going to be a reversal at this point, because reversal means we're coming all the way back to the beginning point and breaking down. Now, what I want to point out is once you've entered this trade, the blue level and the other blue level, this is your area of action. Between the blue levels, you want to take profit. Why between the 2 blue levels? Well, you see this second blue level twice. At this point and at this point, 2 times, price has had difficulty getting above it. So if resistance is resisting price, that shows you that there is a slim chance that price action will break up. Here, it proved it. It did not break up because of the previous resistance. See? What is the chance? What is the odd of it breaking above the 3rd time? To play safe, you will say it did not manage to break above 1st time. It did not manage to break above 2nd time. It probably will not break above 3rd time. So I'm going to take profit. You're going to take profit before it gets to blue price level number 2. You're going to take your profit. You can take it at any point here. Once you see 1 red candle, you may decide to take profit at that point, and you've gone from blue, first blue, up to this point. You got some profit there. You could decide to go back in. This is how I trade, guys. I'll go back in again at that second green point. Can you see that breakout? Breakout from this point. Jump back in the trade again. Why am I going back in? Because I still have some profit margin. Remember, I'm taking profit between the 2 blue lines. If I'm going to go back into this trade at this point, once price action breaks out at the top of that rectangle, I'm jumping back into that trade. You can see it keeps on happening. You go up, it comes back to retest the entry point. And what happens? Price again moves up. I have this rectangle up here that shows my take profit zone. Professionals actually take profit in an upward trend, and we're always going to take profit. When we see green, we take profit. When we see red, we prepare to buy. And that took me a long time to switch my mindset around, because when I see red, I sell. When I see green, I buy. But to increase your win-loss ratios, when you see red, you need to get excited because price is getting cheaper and cheaper. You get excited. It's like there's a sale going. Now you're only waiting for when there's going to be a breakout like back here, so you can jump in at a cheap price. That's where you make your profit, because you bought cheap. You have a chance of price action moving all the way back up to the blue level, all the way back up. This big white arrow shows how much price movement you can profit off. You can profit off this range rather than buying halfway through and then your trade going against you. It says only buy on the close of the candlestick. Now I have mentioned that once I was explaining the breakout and the breakdown. You're always waiting not to see green. You're waiting for that green candlestick to close. It has to close. It has to close and present green. A green candlestick can turn into a red in half a second. So that's why we wait for it to turn green. And my very last point is always, always, always set your stop loss, period. We're all working, guys, to become profitable traders. When you become profitable, the next goal is to become more profitable. The minute you can attain onto $10 a day, The next step is to try to make $20 a day, right? You don't want to stay at $10 a day forever. The minute you can attain that $20 a day, 3 out of 5 days in the week or something like that, then you want to try to see if you can attain on to $25 or $30 or $50, on and on and on, until you get comfortable with the $100 and the $1,000 a day type of trades. Okay, and that's all I have for today. Well, that's all, folks. I hope you've learned something from this video. And if you have, the only thing I ask is that you hit that like button, comment below, because I do use your comments to better inform me of what other content to create. Share with your friends and family. Make sure you subscribe to my channel, but most importantly, don't forget to hit that notification bell. That way you get my videos as soon as I upload them. And I'll meet you in the next video.